This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices gained on Monday, supported by geopolitical tensions in Europe and the Middle East, although the prospect of more oil supply and concerns about the impact of trade tariffs on global fuel demand weighed. Brent crude futures rose 45 cents, or 0.67%, to $67.13 a barrel by 07:01 GMT, while the U.S. West Texas Intermediate crude contract for October was at $63.15 a barrel, up 47 cents, or 0.75%. The October WTI contract expires on Monday and the more active November contract rose 43 cents, or 0.69%, to $62.83 a barrel.
Iraq has increased oil exports following the gradual unwinding of voluntary production cuts under an OPEC Plus agreement, the country's state oil marketer SOMO said on Sunday. Earlier this month, 8 members of OPEC Plus agreed to raise production from October by 137,000 barrels per day. OPEC Plus has been increasing production since April after years of cuts to support the oil market. The increase in Iraqi exports is expected to generate hundreds of millions of dollars in additional revenues at current price levels, SOMO's Director General Ali Nazar al-Shatari told the Iraqi state news agency.
Moving on to the top news in the energy sector.
A record level of global nuclear power production seen in 2024 will be hard to maintain in the coming years due to a lack of required investment, aging plants and project disruptions, the World Nuclear Industry Status Report said on Monday. Nuclear power has experienced a revival in interest from various countries trying to phase out fossil fuels, with the United States recently pushing hard to make nuclear energy a policy focus and securing several agreements with other countries to boost production. Global nuclear power generation reached a record in 2024 of 2,677 terawatt-hours after declining for 2 years, largely due to growth in China, data from the report showed.
U.S. energy firms this week added oil and natural gas rigs for a third week in a row for the first time since February, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, rose by 3 to 542 in the week to September 19, its highest since July. Despite this week's rig increase, Baker Hughes said the total count was still down 46 rigs, or 8% below this time last year. Baker Hughes said oil rigs rose by 2 to 418 this week, their highest since July, while gas rigs held steady at 118. Next, we have the top news in metal markets. Gold surged to set a fresh record high on Monday, buoyed by investors' heightened expectations of a dovish rate cut path, ahead of remarks by multiple Federal Reserve officials and key inflation data later in the week. Spot gold rose 0.9% to $3,716.27 per ounce, as of 0820 GMT, after hitting a new record high of $3,719.65 earlier in the session. U.S. gold futures for December delivery climbed 1.2% to $3,751.20. I would expect gold to reach new record highs this week, with Fed officials likely to indicate further rate cuts, but also being data dependent on the pace and magnitude of cuts, said UBS analyst Giovanni Stanovo.
China will strictly curb new capacity in the steel sector, state broadcaster CCTV reported on Monday, as the world's biggest steel producer tackles overcapacity that has pushed down prices and sparked a protectionist backlash abroad. The Ministry of Industry and Information Technology, together with other departments, plan to stabilize growth in the sector in 2025 and 2026, CCTV reported. The plan involves implementing precise regulation of production capacity and output, and strictly curbing the addition of new production capacity, the broadcaster said.
We will now look at the top news in the agricultural sector.
Chicago soybeans lost more ground on Monday, hitting a 6-week low as a phone call last week between U.S. President Donald Trump and Chinese President Xi Jinping did not provide any news on agriculture. Wheat slid to a one-week low on expectations of higher global supplies, while corn was largely unchanged. "We were really hoping for some positive news from the call between the two leaders," said one oilseed trader in Singapore. "It is very difficult to imagine an upside for US soybean prices if China continues to stay away from the market."
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.